Hello, good to have your company here at Ausbiz. This is the Global View on this Tuesday. I'm Andrew Gagan. Good to have you with us. Let's take a look at what's happened overnight. Global equities continuing the rally set in motion late last week as investors on Wall Street sought bargains after the Nasdaq and S&P 500 fell into correction territory. Of the 11 major S&P sectors, real estate and energy led the gains. Stocks specifically, Walmart, IBM and Goldman Sachs led the Dow higher. Tesla fell after broker Mizuho lowered its price target on the EV maker to $430 a share from $515, which is down more than 40% on the year. News reports indicate that Alphabet is in advanced talks to acquire cybersecurity startup Wiz for around $30 billion. And quantum computing stocks such as D-Wave Quantum and Quantum Corp jumped as AI chipmaker NVIDIA kicked off its annual conference. Intel shares surged on reports that incoming chief executive Lip-Bu Tan has considered significant changes to its chip manufacturing methods and artificial intelligence strategies. Well, President Trump's tariff hikes will put the brakes on growth in Canada, Mexico and the United States, while driving up inflation. That's according to an OECD forecast. The Organisation for Economic Cooperation and Development estimates that US households will pay a high direct price from new import taxes. It has global growth slowing slightly from 3.2% last year to 3.1% this year and 3% next year. And in the latest US data, retail sales rebounded last month just as tariffs on imports and mass layoffs of federal government workers began to weigh on sentiment. Retail sales rose 0.2% in February after a revised 1.2% decline in January. Meanwhile, factory activity in New York State plummeted this month by the most in nearly 2 years, with new orders falling sharply and input prices climbing at the fastest rate in more than 2 years. And US home builder sentiment dropped to a 7-month low in March as tariffs on imported materials raised construction costs. With shorter dated US Treasury yields rose in response to the retail sales data. The yield on the 2-year up some 4 basis points to 4.05%, the 10-year at around 4.31%. And the US dollar remains near a 5-month low against the euro, while the Aussie is trading higher at 63.9 US cents. And Bitcoin is trading around 84,000 US dollars. Oil prices have risen slightly after the United States vowed to keep attacking Yemen's Houthi militia until the Iran-aligned group ends its assaults on shipping in the Red Sea. Meanwhile, President Trump has said he would speak to Russian President Vladimir Putin about ending the Ukraine war. And Chinese economic data buoyed hopes for higher oil demand. Brent futures up 0.7% at $71 a barrel. Copper rose more than 1.5%. Iron ore down 1.3% to $103 US a tonne. And the gold price firm to be trading at $3,000 US an ounce. Well, we just got across some of that US retail data to get some greater detail of the state of the US consumer and how it's affecting those retail stocks. I caught up with Arun Sundaram from CFRA Research.
Yeah, we got the February retail sales data today. It did come a little bit lighter than expectation, yet the markets were up today. And I think it's because we did see, even though it did miss expectations, we did see a rebound from the really poor results in January. So we did see some growth in retail sales in February compared to January. And I think that's enough to kind of help alleviate the recession concerns that's been kind of going around through the market. So even though it was weaker than expected, the fact that we saw growth, does alleviate some of those recession risks and concerns.
Nonetheless, Aaron, there are obviously ongoing concerns about the impact of mass government layoffs along with tariffs and how that's likely to affect consumer sentiment and therefore spending.
Yeah, I think that's been the big talking point risk this year is really the policy risks, mainly around tariffs. And overall, the consumers don't like uncertainty and especially, right now, given that inflation expectations are increasing, consumers are expecting prices to go up this year. And that's caused a lot of people to have more caution, not just consumers. And it's also reflected if you look at the consumer sentiment data it did come down in the latest month, and it's largely because of inflation expectations are rising. And you're also really seeing that being reflected in corporate earnings too. Companies are guiding pretty conservatively for 2025. And it makes sense right now because of how much uncertainties there is around the market. A lot of companies just don't feel like they need to be really aggressive with their outlook, which you think is the right approach. But I think because of the cautious outlooks from various retailers, investors are somewhat worried that we're going into a period of slower economic growth.
Just before we get into some of those company specifics, Arun, we just had also the OECD out with its latest forecast looking at the impact of those tariffs, saying it's going to put the brakes on growth, certainly in the US, while driving up inflation, saying that essentially US households are going to be paying a high direct price for those new import taxes. What are you seeing there at CFRA as far as that is concerned, and the possibility, of course, that the US could fall into recession?
Yeah, so certainly recession and stagflation risks are on the rise, but our base case is still that we avoid a recession here in 2025. I think a lot of the concerns, inflation, the labor market, things like that. A lot of these concerns are, what we would call it self-inflicted, especially the tariff and inflation concerns out there. Meaning it can also be fixed if the government does really use tariffs more as a negotiating tactic versus blanket tariffs around different all kinds of countries. So we do see the consumer holding up this year, and we think, and because consumer spending makes up about 2/3 of overall GDP. It's obviously very important that the consumer health, and so we do believe consumer spending will stay resilient in 2025, and that will ultimately avoid a recession.
So let's get to some of those retailers then, with I guess a focus on the largest, for instance, Walmart. What are we seeing there at the moment?
Yeah, so Walmart was one of those, one of the first retailers, big box retailers, to report this earnings season. They had a great Q4, great holiday season. But their outlook for this year was a bit cautious. And now if you have to remember that Walmart typically guides pretty conservatively to start the year, but this outlook felt a little bit more conservative than usual. And a lot of it is because of policy risks, tariff risks, job losses, things like that. And that caused somewhat concern throughout the market. But we think Walmart is still a great buying opportunity. The company we think is gaining share in grocery and discretionary categories as well. They're doing really well online. Their e-commerce sales is growing about 20% year over year. Because of the growth of the e-commerce business, they're also growing newer revenue streams. They're selling advertisements on their website, and that's a very high margin revenue stream for Walmart. They're also deploying robotics and automation in their fulfillment centers. So we do believe that Walmart will not only see strong sales growth this year, but they'll also see operating margin expansion, which is, I think, a key metric for investors, that they want to see Walmart expand their operating margins. And I think they will because of these newer, higher margin revenue streams. And so that's why we kept our buy rating. And we think even now is a better buying opportunity now that the shares are down about 9 or 10% or so from its highs.
So Walmart is one of those bellwethers of consumer spending in the States, as is Amazon. Similarly to there, Arun, it's also expressed caution about what's ahead.
Yeah, so Amazon was another one of those companies that had a great Q4, but then their outlook for Q1 was, again, much softer than expected. And again, I think there's a lot of conservatism built into the outlook. And you have to remember that for Amazon, the majority of its sales are from its e-commerce business. However, the majority of its profits are actually from AWS. AWS is really their cash cow, but in terms of the top line, it's e-commerce that drives that growth. So the softer than expected revenue outlook is really expressing some caution in that e-commerce business this year. But again, I think Amazon, Walmart, the rest of the retail industry, they're taking a good amount of conservatism into their guidance because of inflation and tariff risks and the impact it can have on consumer spending.
What else are you seeing there in the retail space amongst the bigger retailers?
Yeah, so I think so we also cover food retailers like Kroger, for example. We think they're also doing. So we do have a buy rating on Kroger as well. We think they're gaining some market, or I wouldn't say they're gaining market share, but their sales performance is improving, and Kroger shares actually trade at a pretty discounted valuation compared to the big box retailers like Walmart, Costco, and so forth. So we do have a buy rating on Kroger. We also really do like the club store channel. I didn't talk about this before, but Sam's Club is a major club here. It's owned by Walmart, and that's a business that's growing pretty attractively. Costco, many people know about Costco and how well it's doing. We do have a hold rating on Costco right now. Their top line is accelerating. It's outpacing peers, but the shares we think is a bit expensive. So that's why we have a hold rating on Costco. But really, our top picks throughout retail right now is Amazon, Walmart, and Kroger in that order.
That's the retail picture in the States. Arun Sundaram there from CFRA Research. Let's now turn our attention to the local market. We're expecting another positive start. In fact, that would be the third session in a row. Given the severe sell-off we've seen over the past month, a significant turnaround. SPI futures up some 0.7%. Stay with us. We will get right across the open in just a couple of minutes' time.